and welcome to Ensuring Success 2022 Day 2, Session 14 of 14. We've been having a 2-day CPE marathon here in Dallas, Texas, and are so glad that you can join us. Hope you've been with us for all 14 hours, but if you haven't, we might forgive you. Anyway, I'm Gail Perry, Editor-in-Chief of CPA Practice Advisor magazine. And without our sponsors, we would not be here. So I'd like to just make a big shout out to all of the sponsors who make this event possible. And they include ADP, Avalara, BotKeeper, Corpay One, CPA.com, Canopy, Caseware, Field Guide, eFile for Biz, Intuit, Right Networks, SafeSend, Sage, SureLink, TaxFile, Tech Guru, Xero, and Zoho. In particular, I'd like to thank Sage, who is the sponsor of this session. And just a little more housekeeping, and then we can get going here. For CPE credit, if this is the first session you've been watching, we're sorry that you weren't here for the other 13, but nevertheless, I would like to explain to you how to get CPE credit for this session. We will break for 3 times during the session, and at each break we'll show on the bottom of the screen a number, and you'll need to remember that number, and we will call attention to that number with this sound. Okay, so 3 times you'll hear that sound. You need to record the number. That is your verification for having attended the whole session. At the end of the day or whenever you're ready to get your CPE credit, you can go to ensuringsuccess.com, click Get CPE Credit at the top of the screen, and you'll go to a page where you enter your email address and then enter the codes for all the sessions you attended. And after you enter a code, you click twice, and then your CPE certificate magically appears, and you can download it from there. We are on social media with the hashtag DecemberCPE, so feel free to visit us on Twitter, look for all of our pictures up there. Feel free to post your own, chat with us, comment, say good things. And then also on your screen, you'll see an Ask a Question box. And in that box, if you would like to ask a question of any of our speakers today, you can do that. If you are having any technical difficulties, you can post a question about that, and our tech team is standing by to help with anything that might have gone wrong. And also, if you just want to share comments about your own experiences regarding the topic of our session, that would be fine too. This particular session is Project Management and Understanding Scope. It is presented or sponsored by Sage, and Sage has also been generous enough, or maybe it was just Ed, who was generous enough to share some wine with us. So cheers, everyone. Cheers. All right. And I'd like to introduce our panel. I have to my right, Aaron Berson, Sean Duncan, Ed Kless, Jackie Meyer, and Alexander DeFelice, and I'd like each of them to introduce themselves real quickly.
Sure. I'm Aaron Berson. I'm the CEO and founder of Fringe Advisory. We help small businesses with all their accounting and finance needs. A little bit about myself. I've built 3 CAS practices, once at a top 20 firm, 200 firm, and 2-person firm. So kind of done this at all different levels here.
And my name is Sean Duncan, so if you were at the first session, I'm still Sean Duncan from SMD Consulting and Accounting. And yeah, I've been here the whole time. That's why they have sleeping bags down here. I own SMD Consulting and Accounting and a couple other companies, but SMD is focused on all advisory. So we actually were the largest firm in Frisco, Texas a while back, and then stopped doing tax prep to focus solely on advice. And you can imagine project management's a big part of that. What's the scope of the work? How are we charging for that? How do we execute that plan? Huge part of what we do.
All right, Ed Kless with Sage. A little fun fact, I joined Sage 18 years ago, but before I was even an employee, my first session that I did at a summit was on scope. So I've been doing this. Scope is like my free bird. It's like people come out and Ed do scope and they have lighters and stuff. It's like, it's crazy.
We're going to pull them out in a little while.
Yeah. What did you tell him?
Hi, I'm Jackie Meyer, and I also have been here this whole time. But I mean, what a great conference. Thank y'all so much for putting this on, and everyone be very thankful for the free CPE. They work really, really hard here. But anyways, my name's Jackie Meyer. I'm the CEO and founder of the Concierge CPA program for accountants and Tax Plan IQ, a SaaS tax planning software.
And I am Alexandra DeFelice, Director of Marketing and Business Development for Payne & Fears Law Firm in Southern California. And unlike you two who are only here for the first and last session, I was in this seat the entire time.
Fair.
We're always happy to be here.
All right, thank you so much. I'm just going to kick this off with Ed because this is his Freebird. So let's hear about project management and scope. What? I don't even know what that is. I might have known before 14
I guess
hours
we'll start
of
with a
this.
quick definition of a project. A project is a temporary endeavor undertaken to create a unique product, service, or result. The two important things on that are temporary, it's not supposed to last forever, and unique. So by definition, all projects are unique. There's no such thing as the standard. There's no such thing as the plain vanilla. So when someone asks you for, can I just have the basic standard implementation, it doesn't exist, right? Because all of them are unique. And from that, we can learn some different things. So scope is but one element of project planning. And it's probably the 60% of it. But there's other aspects of it that I think are important. I think the best way to think about scope is that a scope is really the accumulation of all of the objectives of the particular engagement. Now, there can be one objective of the engagement or project. There can be 6. It's like a 5 plus or minus 3 usually as rule of thumb on that. But I think what's important is to understand what objectives are in regard to scope. And objectives are not goals. And I think one of the things that people get confused about, because I know I used to ask this question as a young consultant, can you give me your goals and objectives for this project? And I would use them interchangeably, but they are two different things. Goals are that to which we aspire, but might not happen. And the objectives are the things we're going to do with the idea is if we get these things done, we will also then achieve the goal. Right? So we need to understand what the objectives are. And the objectives need to be stuff that you can check off a list. So it might be something like or create a new report. It might be something like load 3 years of history. But there's things that you can absolutely check off and say, we've done those things. And I think that's one of the most important things to understand, that objectives have to be, for lack of a better word, ready? Objective, not subjective. They can't be improve our back order process. That's a subjective thing. That's not an objective. That's a goal, might be a goal, but it's not an objective. So that's, I think, is the first thing to understand is the scope is the sum of your objectives.
Okay, sounds good.
And we're done.
That's excellent.
Let's bring on the wine then.
All right, so what makes a great project manager?
Ooh.
Oh, that got a good
Have we
response.
found one yet?
Well, I
We're
was
still
going to say,
looking.
I've probably done it all wrong. And at Meyer Tax, I just fell into having project managers because I didn't want to be in the middle of all the work anymore. But I was never trained up on what official project management was. And the more I get exposed to that, the more I'm like, wow, I really screwed that up. But it was great to have project managers because they were responsible for all the day-to-day interaction with the clientele and then making sure those objectives got done so that it wasn't all on my shoulders. And so, you know, we probably did it all wrong, but at least we got started with it, right? Yeah, we tried.
I've found, so obviously there's people that have certifications for this, so that's clearly something you can go get a PMP or something like that. A lot of it is detail-oriented. We want to make sure that, but to me, it's just been the accountability. Somebody that will bring it to the finish line. And I've said this a million times. I actually just said this on a webinar yesterday, and I think, who's the champion? Who's the person that is going to make sure it's done? And that's a unique personality, oddly enough. Not every, some people will check their lists, but do they make sure the goals were met? And they bring it to the finish line, or are they the ones that just sit there and say, "Well, I'm sorry, I was just still waiting on information."
Right.
A good project manager is that person that's accountable, that knows we have a desired income, and we're going to bring it there. Now, how you find that, identify that, there's a whole bunch of interview techniques for it. But to me, it's always been about the accountability, and they see it to the finish, and not just try to check a list and move on.
In the agreement, we were talking a little bit about this, and I think it's important to note that project management is an oversight role, not a do role.
Yeah.
Yes.
I think I could be a project manager for just about any accounting product out there, and I don't have to know the details of it, right? I don't have to, because I'll have a technical resource that's going to be able to do that. I don't need to know the details if I'm the person who's in that project manager role. Right, so it's oversight, not do. And I think one of the things that, and this is kudos to you for understanding this and separating this out. No, because in a lot of cases, people don't do this, and what they do is they take lead consultants and try to make them project managers. And this is Peter principling a lot of really great consultants into roles that they're not. It's why great players in sports often are not the best coaches. Right, because Wayne Gretzky was the best hockey player ever. But he was a lousy coach because he couldn't teach it. He couldn't oversee it. He's famous for saying, "I go where the puck is going to be." Well, how does one coach that, right?
Instinct, you can't coach instinct.
Right.
Well, and flipping that the other side is, so a lot of times in the book Traction, they talk about the visionary, the integrator, and the operator, right? I'm a visionary. I'm not the dude you need holding this thing accountable. And I know that. I know it's a weakness of mine. I'm not going to follow back up, so I need an integrator. So a lot of times if you go read books about it, you're looking for the integrator. And what Ed's talking about is the operators are the ones that are the doers. And there's nothing wrong with any of these positions. If you don't move up to visionary because you're an amazing operator, great, be amazing at that. But it's that middle role. The visionary comes up with the crazy ideas, that's the guys like me, and there's people that deliver and execute, to exactly your point. There can be a hybrid, but there always has to be that integrator that makes stuff happen. And that's the way we approach it at my office.
Let's show the first CPE code while we catch our breath for just a second. This will appear on the bottom of your screen. This is the first code for you to remember for this session.
It's so much louder over there.
Yeah. So actually, we have a polling question for the audience that I was thinking, I'm just going to give a second so that they see the code. But it's asking them what they're using for basically for project management. And it's not just talking about people. It's asking them, do they use nothing at all? Do they use Excel? Surprise, surprise. What do they not use Excel for? Full project management software, project managers on staff, or what is a project manager? So I'm going to send this, but can you guys, maybe we could adjust each one, like what are the different ways other than, especially if you're a small firm, you have 3 or 4 people, you're probably not going to hire a full-time project manager. So what are the other options out there?
Is sticky notes still a choice? I'm not sure if that's one.
I mean, we were, even at our technology set, like we're laughing, but even at our technology session, we were talking about doing things simplistically, not with paper. So with paper, not with technology. So if that's the solution, I mean, I know it's a joke, but there are ways that don't have to be sophisticated things that you purchase.
You can over-engineer anything.
But Aaron, do you want to start with us?
I was just going to say, especially at a small firm, if you're not separating it out or not having that dedicated person to hold everyone accountable, a system at the bare minimum, even if it is Excel, right? At least gives you that high-level overview to be able to help hold yourself accountable or your team members hold themselves accountable, because you could see it all in one place, right? Whether that's just highlighting things in green on an Excel as they're done so that at a glance you could see what still needs to be done, or a full-blown project management solution with automations built in that are routing things over to everyone in lieu of a dedicated resource in the way of a person to do that. So I think that's at the minimum what everyone should be doing.
Oh, and surprise, surprise, 48% of the respondents said Excel.
That's okay. I mean, when I first started out, I used Excel too, but then I got to a point where I was managing hundreds of projects and returns, et cetera, and I couldn't sleep at night because I was so worried I missed something in Excel. And so there's different levels that you can get to depending on where you're at in your practice.
And that's exactly my answer, is the typical accountant answer. It depends, right? I mean, if it's like, call my wife back, it might be a sticky note. I'm not going to put that in my practice management software, call my wife back, and then everybody thinks I'm in trouble, because I usually am. But it can be sticky note, but it usually, for most, the core answer is, for most of what you're going to do, it's going to be a practice management software, right? You're going to buy something to keep track of everything and assign the work around. That's the main one. I use Gantt charts all the time when I'm trying to do bigger flows. My Gantt chart's on a whiteboard. I don't actually even use Excel. I'll scope out stuff real quick. And if you're not familiar with the Gantt chart, go Google it. But it's really just a timeline tool to keep things in order to make sure that you can scope them out. So you can use anything that works for you, but if anything feels cumbersome and you're like, oh my gosh, you're using the wrong tool. And it could be you need to downshift, to Alexandra's point, sticky notes might be fine, or you need to upshift into a legitimate software. And if your software's still not good, it's time to upgrade the software.
or you're just using the software wrong too, because you can over-engineer anything, especially some of these like ClickUp and Asana, right? You have the ability to do everything under the sun. You could over-engineer a process so easily, so you could make it cumbersome when it shouldn't be. But I also wanted to mention something because you brought up, calling your wife or whatever, right? There's a difference between project management and to-do list tracking,
Good point.
right? Like, so I think that's also a big thing. The project management needs to be tracking those objectives that Ed was talking about and what we need to do to get those objectives done at a higher level, not the so granular of click this button, do this, because then it easily becomes cumbersome because a simple task has 10 items that someone has to do and check off and follow. So I think just like separating those two is important.
And you'll change softwares. I mean,
Yeah,
I am now on my 4th practice management software, and I've been in practice since 2006. So it'll happen. You'll graduate, you'll shift, you'll change, new toys will come out, and that's normal.
So how do you know the toy is right for you?
My director of operations tells me. But
Is that your wife?
That's the home director. Yeah, that's my office wife. Yeah, she's known as the office wife because she tells me what to do when I'm there too. No, I have actually moved completely to where my team tells me. So my integrator is now in charge of just telling me where our tech stack's going to go. I mean, obviously I'll check things and have an input, but I, as the visionary crazy person, I'm not the one building out tasks and building out scope and holding accountable. So I really need them to have the tool that they're comfortable with. I get to write the checks.
And several things that we've mentioned in several sessions, right? It's like the end user needs to like it and buy into it, otherwise it's going to fail, right? Yeah. And the tech stack idea, which is find out the core things that you need that are the most important, and then find tools that play well with those tools, 100%. Right?
Okay, you've mentioned a few times scope and the scope of the project. What do you mean by scope, and how do you corral it?
Well, I go back to my definition as scope is the accumulation of objectives. So if you have whatever the objectives that you have listed, those together is what the scope is. Scope is but one element of what's called the triple constraint in project management, which is if you go to any project management book ever, like on page 10 is going to be a triangle. It's going to be called either the project triangle or the resource triangle or the triple constraint, and it's scope, cost, and time. And what we have to understand that time in this aspect, especially I have to explain this to accountants, is not billable time.
It's actual time. What?
No, well, it's duration, not effort. Right? So when we say time is when does this thing need to be done by, not how many hours is it going to take me. And project managers are primarily concerned with duration, not effort. And that's one of the things I think accountants get stuck on, is thinking that they have to fold everything into this notion of effort. No, it's more about duration. Project managers care, did you do it by the 17th of July?
Right.
If it took you 20 hours or 4 hours or 30 seconds, I don't care, as long as it was done by that time. So this triangle, which I like to call the triangle of truth, is because what you want is an equilateral triangle where they're balanced. So where scope is in balance with cost, and that would be your price if you're charging it externally, and then versus the time. And you get in trouble when one of those variables is not in alignment with each other. The problem is that it is like a triangle in that to keep it balanced, to keep it in 60 degrees, 60 degrees, 60 degrees, if you remember back from geometry class, right, an equilateral triangle, is that you have to have those in balance. And oftentimes what happens is that the customer comes to you and says, I want to pay this, and you need to deliver it to me by then, right? So they solve for cost and time, and then you're supposed to say, okay, if that's what you're going to pay me and that's when you need it, fine, but this is what I'm going to do for you. Because it's an equation. It's an A plus B plus C equals 180 degrees. And they have to be in balance. So, and this is where scope creep comes in. Scope creep comes in is when when the customer asks for something above and beyond what was originally listed in the objectives. Right? And that means, if that's true, then you have to either come up with a new timeline, when is it going to be done, or it's going to cost you more money.
So Ed, when we were preparing for the session, Aaron said something about educating about, I don't know whether it's internally or educating clients or both, about what's outside of the scope, and then educating your your team about what to do when that happens?
So it was internal, right? So
Yeah.
educating your team on what is in scope for that project or with that client relationship, because most of the times a lot of the doers have no idea what the total scope is. They know what they've been tasked with, right? So if the client comes and asks them for an extra this or that, they don't know it's extra because they just assume it's part of what we're doing. That's why the client's asking for it. So educating internally what that scope looks like so that they can then identify when it goes out of scope, but then also setting up processes around what do they do with those out of scope requests, right? Do they have liberty to take a few of them on and do it a little bit here and there, or do they need to raise it up to a manager or get someone else involved to have that conversation about balancing that triangle back out?
Yeah.
Right, and then Sean had an example about empowering your employees. Can you share that?
So what he's saying is the absolute silver bullet to the whole darn thing. I mean, it's clarity on what is and is not part of the job. Because scope creep, we've all experienced it. And I've always talked in my office, I give you authority to make decisions in the best interest of the client. But that also has a yes and a no component. Yes, you're authorized to go ahead and do this a little extra because you know what, just take care of the client. But that can go way off the rails, is what we a lot of times experience. And I mean, I had one employee just go completely bonkers and gave away $30,000 worth of work. I mean, and I'm not making that number up. He just kept going, and as it surfaced and bubbled that he had got himself in over his skis, he waited too long to tell me. But the employee also needs to be authorized to say, ooh, I don't think so. And that's a harder one for them, is being able to say no, because we're all people pleasers. Like, we want to help clients, and we want to do these things, and we don't want them to not like us, and we might lose the client and all that panic. But yes and no authorization is exceptionally important, and you've got to be clear in telling your employees what that is so that they can make their choices.
I just want to add in there, because this is a really important point. This is the notion of change management inside the project, and I think it's important. First of all, in your scope document has to be what is the process listed for a change, and just one small language shift changed my life when I was doing this 30 years ago, and that is going from just having change orders to having a change request. To say that a change request must be made, and then there's an approval process on the change request, and it's either yes or no. Right. And if it's yes, then it becomes a change order. If it's no, then it just gets put into some work, and maybe that's a future project that we're going to do for you at some future point. But you're right, clarity around what's in and out is most important for people so they know. But then once they recognize it, you can say, well, but if this is important to you, great. We have a process for making a change. It's called a change request. Here's what we need to do, and you can fill. You don't make the customer necessarily fill out the form. You can do it with them, but one of the things in that form is there going to be additional cost? Is there going to be additional timeline that happens here? And then they get to make a choice as well as to whether or not they want to do it.
And that process is obviously governed by how large or small the project is, right? I mean, you're not going to go, hey, by the way, I'm going to do this 11040 at the W-2 and nothing else, and go, whoa, you asked for your middle initial to be changed, so I need to take a process. There's obviously reasonableness and it's materiality to this as well. So, hey, we're accountants, materiality. So there's always a process, but also that's where the authority is like, okay, it's a middle initial, I'm just going to do it. We don't have to go through a process.
But then you said you had another level of authority, right, where there was like certain things where you can empower them to give away for free that aren't really free. Yeah.
So no clients are listening. Let's make sure. Okay. So we have a scope of work where you're allowed to do a certain number of meetings under this agreement. Like there's a certain number of meetings. Inside of my budget, I go ahead and build in an additional meeting into the value. If the client never needs that extra meeting, congratulations, I'm more profitable. But then what my employee can do is say, we have a really important issue. Tell you what I'm going to do. I'm going to go ahead and we're going to do an extra meeting, no charge. I want to take care of you. Which really empowers the employee, gives them authority. The clients love that the employees are authorized to do that. But then when the second request for a meeting or whatever the thing is comes, they go, I already gave you that one. We're going to have to do a change request, and let me see what we can do to change the scope. But it's built in, and that's where the clarification is on what you can give them to do is, here's what you're allowed to do it. And if they don't want it, sweet, we'll take that extra profitability.
I think we have to take a step back though here, because we're all assuming that the accountants watching here have properly define the scope of the engagement to begin with.
I was about
And
to
that
say
doesn't
that.
happen.
I was about to say
So
that.
In
that's
the first 5
why.
minutes, I told them what they needed to do in the first 5
Right,
minutes.
right. But I mean, that's why I think packaging is so important, because you're literally outlining the boundaries of the engagement, exactly what is included, what is not. And no, the engagement letter shouldn't have all of that information. Yes, it should talk about scope and that kind of thing, but you need to have client guidelines, you need to have the packaging down, and you need to be really clear and over-communicate all the things that are included or not included.
Yeah, for sure.
Let's take a quick break.
Okay.
We'll come right back to this subject, but we'd like to first hear a word from our sponsor, Sage, and we will follow that with your second CPE code, so don't go away. Welcome back. And if you look at the bottom of your screen, you will see the second CPE code for this session. Thank you.
So a question just came in from the audience, and you might get, we didn't prep for this exactly, but maybe someone can make this up. They want an example of a project with scope, and so they can understand what you're
An
saying.
example
okay.
of a project. Go ahead.
Yes.
Yeah, right.
All right, everyone's
So
ready.
we specialize in tax planning using the ROI method of tax planning. And so every actual strategy that we're doing in that phase of planning is kind of a product or deliverable or objective in a way. It's something that we're accomplishing. And if we go outside the scope of those strategies, it's actually reevaluating the entire project for a new implementation fee or new maintenance fees and whatnot. But you can actually go to my website. A lot of people like to see the exact packaging that we do. It's at meyertax.com/packages. And so feel free to swipe and deploy, because it works.
Meyer with MEYER tax.com
Yep.
/
Packages.
packages. Okay, Aaron, you have an example?
No, well, not a specific example, but I was going to say, I mean, there's so many. Where do you choose from? But listening to what you're saying, I think it's important to note that every client, it's not, a project isn't that one client relationship, right? Every relationship with that client could have 10 different projects, right? A tax planning project, the outsourced CAS project, their tax return is a project, helping them get financing for a building they're buying is a project, right? Every one of those things can be scoped out to build out those objectives of what you're going to do, when it's due by, how much you're charging for it. And I think when you start thinking of it that way also, it makes it easier for you to identify when you're starting a new project, because a lot of accountants and CPAs just have no idea. Yeah, they're just like, I'm just going to keep doing everything they need and don't realize, oh, I'm in the territory of a new project, I need to scope this out, right? I mean, we look at something of if a request comes in with where we think it's going to take us more than 5 hours to do, that's a new project that we're going to scope that out because we want to price and do things around that. Whereas a lot of those other smaller things, not so much, right? Maybe that's just the ebb and flow of in and out of scope or the leeway you build into the project, but I think that's an important thing to note.
A couple simple ones. Back when we used to prepare tax returns, or if you're doing tax returns, what forms are included. You can actually just list the forms. I loved telling them which ones I'm not interested in doing. I'm not touching that dang F bar. I'm not touching this. So you can go ahead and specifically exclude, so they know real clearly how much you're going to charge them if they want to add those things. So tax prep, super easy. Here's what I'm doing. And they, oh, but you're going to do my corporate return too? I didn't know you had one. That wasn't on the list. We just sent one just this morning, and this is sort of my favorite simple example. S-Corp election. Well, that's just a 2553. No, it's not. I just drafted one up this morning. We're doing that. We're going to correspond with the tax preparer because, we're not the tax preparer. We're going to also respond to all the IRS letters because we know they're coming. We know we're going to get the letter that's going to say, we didn't know you were an S-Corp because they're so far behind. We also know that when we're popping payroll in Q4, we're going to get 3 letters for Q1, 2, 3. So I went ahead and told them, at no additional charge for your $2,500. I did just say that out loud. $2,500 to set up your S-Corp because it's going to save you $10,000 a year. I'm going to answer all those letters. No extra charge. Oh, by the way, we're going to correspond with your payroll company to make sure that you have your reasonable comp set up. And we're going to calculate reasonable comp. All this stuff you were already doing, clearly defining. We're filing the rev proc that's going to go with it. We're corresponding with the CPA that's going to prepare the return. We're going to handle your payroll. We're going to calculate reasonable comp. And we're going to answer the letter that says, no, we don't have record of your S corporation when you know full well they do. And then those 3 letters that are going to show up for the payroll, missing payroll because it all started in fourth quarter. Everything else, it's not included. And so if they have some other weird thing that I didn't anticipate, but you guys all know that's the steps. Put it down, and there it is.
Just kudos, you just listed it perfectly because they all began with verbs. Answer, correspond, that's what objectives need to do. So let me put a plug in. If any of you are going to implement Sage Intacct, here would be an example. Here would be an example of what a Sage Intacct. It might deploy the solution because it's in the cloud, so we don't have to install it anymore. So that's good. So deploy it, convert the data, 3 years worth of history. Right. Provide
up to 3 years.
Up to 3 years worth of history.
That's a scope limit right there.
Right. So up to 3 years of history. Create customized reports. Right. And then here's the thing that you can include in your scope. Provide project management. That's actually an objective in and of itself, providing project management. One of the things that I would do is I would often, when I was doing implementations of software, is I would, believe it or not, say, Mr. or Mrs. Customer, you're going to manage this project. It's yours. You manage it. Now I need to see your scope document. I need to see your response plan. And they're like, well, we don't know how to do that. Oh, would you like us to manage the project? Yes, we would. Okay, great. So then I never got this because to this day I hear this. Why am I paying for project management? Right? I mean, I hear this all the time.
He needs to do that again, right?
Why am I paying for project management? I hear that all the time because people don't start with the premise, oh, it's their project. You want us to do it? Fine. That's one of our objectives, to help you do that project management.
Did we answer the question?
I think we did. We got a bunch of examples. Yeah.
I think so.
Hopefully.
Okay, anything else in there from the audience?
Not yet, but I anticipate more.
Okay, so what does out of scope look like? When you've set it all up and you've done it, you've got the scope document, the scope statement of scope, you've determined what you're going to do to accomplish the project, and somehow it just keeps expanding, whether it's your staff or whether it's just little things like that middle initial, except they pile up, what?
Let me just jump on that. It's like, okay, integrate to our Amazon web store. That wasn't in the list I gave earlier, but now you find out you need to do that. All right, well, would be a change of the project because it's beyond the scope. But I do want to draw a distinction. You guys were talking about scope creep earlier. There is a distinction between scope creep and scope seep. Scope creep is when the customer requests something else. Scope seep is when the professional takes it upon his or herself to provide something that wasn't included out of the goodness of their heart. This is the $30,000 of
great intentions.
Yeah. Right. But it was scope seep, right? It was, if the customer may not have asked for it, they might have just done it. And I'll give a quick example that that happened in my career. We were doing a conversion, right? And the Excel, which was new at the time, was this is how old I am.
He called it the
Excel.
Sure wasn't the latest one.
They loaded that on the Facebook later on.
Yeah, the Facebook didn't exist. But there was a really cool function in Excel where you could change the old the vendor names, which are all in caps, to upper and lowercase. It was called the proper function. And I thought that would be really cool if I delivered them the new vendor names in proper case. Except now, IBM was capital I, lowercase bm. So what I did was, in doing scope SEEP, in other words, doing something above and beyond what I said I was going to do. I didn't say I was going to put it in proper case. I just did it. By creating scope SEEP, I then created scope creep because now I had to go back and fix all that other stuff after the fact. So SEEP can oftentimes lead to scope creep.
IBM.
Yeah.
Awesome.
Awesome.
Aaron, when we were prepping for this session, you mentioned something about like a 3-month evaluation.
Yeah, so I was going to say that. So for us, out of scope, essentially we have built into the scope, right? We know we're going to do a little bit more some months, a little bit less other months, and that's going to level out. So we kind of look at a 3-month running average, if you will, of all those little requests. There's like change the letter here, do this there. That by the end of the second month, we know if that's trending towards way more work than what we planned for, or that we're not going to recoup in that third month essentially because we're doing all these little out of scope things. So then that lets us have that conversation with the client of, hey, we're trending this way. If this continues, at the end of next month, we're going to have to reassess the pricing or the deliverable and kind of rescope it. And that kind of gives them the ability to say, whoa, let me scale back on this and let me stay in scope. And then that third month, nothing extra comes in at all. You go the total opposite way. But it kind of puts that framework, and also with the team members, they know that they can give those little things away, but they know they need to let someone know, or myself know, that, hey, we've been doing a lot of this extra stuff for a long time. We need to now have a conversation. So that's kind of how we address that, because there's all those little things that you kind of give away, and we know that. So build it in.
And what's awesome about that, you have accountability, but you make a process to review, to understand what was, because you have to evaluate it, right? If you don't take the time to evaluate what you were or were not doing, how do you know that it even happened in the first place? I mean, until you $30,000 later, you find out that's happened.
That's another thing accountants are bad at. Going back and evaluating, how did busy season go? How did this project go? Oh my gosh, but it's so important, right?
Yeah. Besides just saying it sucked. It'll get better next year. We'll put in all these systems, everything
Which
will
is
be
a
better.
whole other session called an after-action review, which I think we did like 2 years ago.
Yeah, and I was just going to say, can you kind of sum up what that evaluation process would look like? What kind of, just some bullet points of.
Yeah, I mean, under the heading of not scope, but project management in general, I personally think that the after-action review needs to be conducted on every major project in your organization, and a few minor ones just to test. And just very high level, as I said, we did an hour-long session just on after-action reviews. But it's, all right, so here's what you lay out. What were the objectives? First question in an after-action review, what were the objectives? And this is where it usually starts to break down when people go,
I don't know.
I don't know.
Do everything I asked for, right?
That may be the problem.
Yeah. I knew the goals.
that nobody knew the objectives. Maybe, just maybe, from now on, we should always have objectives, right? So that would be a first learning. But assume you get to the point where, okay, all projects have objectives that are signed off on by every customer. Now we say, okay, so there's really 3 questions that are asked. What went well, and why did it go well? What didn't go so well, and why did that happen? And then the last question in the after-action review is, what is the one thing we're going to do different next time? So what did we learn from those 2 things? But just one thing, and this is I call this the curly rule. Remember City Slickers? Jack Palance is walking in with Billy Crystal. Curly, what's the secret of life? And Jack Palance with the cigarette hanging out. One thing. He's like, well, what's the one thing? He says, that's what you got to figure out, right? So, and it's the same thing in project management and after-action reviews. What's the one thing? What's the one thing that we agree that we've learned from this engagement, from this busy season, that from now till Armageddon, we will agree to fix? It's a covenant.
Well, it's a continuous improvement, right? I mean, you don't have to solve all.
No.
You continually improve, and it happens in micro steps. Too many of us is like, oh, so many things I can't do it all. And then you have a whole different project that you have to track and have scope creep in your own life.
Yeah.
Pick something, make it better. Pick something, make it better, and continuously work yourself toward that perfection that you're hoping to have.
One really tiny practical thing that I have my team do is we just have like a Slack channel or instant messaging channel or something like that they just throw their thoughts out on when something happens. So whether it's really good or really negative throughout busy season or throughout a project, and then I can kind of keep my eyeballs on it and be like, oh, that's something we need to escalate now versus, okay, we're going to add that to what we call the debrief and then talk about it then and figure out, because people don't remember after busy season what the heck happened, right?
Yeah, we have in our project management system, we have a section called ideas. For as people are going through it, they can just throw that little comment in there, and then we have something that we can then assign to a different project, and then put that into our continuous improvement plan to then try to build that out and actually improve things. But it's in real time versus after the fact. After the fact's great, right? At least you do it. But real time, you get a little bit more of that kind of emotion of what's really going on, and that kind of helps prioritize the things that people, you could tell, were pulling their hair out over, kind of want to do those things first.
And so I'm sure somebody listening right now is actually going, okay, that's awesome. When am I going to have time for that? And so I mentioned I have several other companies. One of them is the Chief Proactive Advisor program, where I teach people how to move to advisory. One of the absolute silver bullets that I teach, and it's the simplest thing in the world, but you just have to do it, is the work on the business day. It's that time that you are meeting with your most important client, and that's you. No less than quarterly, I would like for you to steal away half a day's time, preferably an entire day. Go to a coffee shop. You're not allowed to answer emails. You're not allowed to answer the phone. You are meeting with you for 8 hours. And that list that you were accumulating, that's when you tackle it. You dedicate that time to be a business owner. And if you're an employee and saying, well, that's great and fine and dandy, man, if you got to take a PTO day to sit down and figure out what you want to accomplish with your life, do it. That's the point. So all this stuff that you're accumulating, we do that. We accumulate ideas, and it's a really cool folder that sits over there. That's the time you address it. Give yourself the space to actually tackle that stuff.
Yeah. And
Sorry, go ahead and finish your thought.
Yeah, no, I was just going to say I actually do a half a day a month on that.
Perfect.
But one of the biggest things that I found really helpful on that is changing up where you're doing that, right? Don't do that in your office or in your work from home space where you're doing everything else and you're going to get distracted. I actually go out of the office, I schedule, a co-working space for half a day, go there, sit there, put my headphones on, and I just focus on everything. Don't open
All
email,
distractions are
nothing.
gone.
Exactly. Just only working on that list. Everyone else can talk to me tomorrow. Like nothing's going to break in 4 hours.
So you pull that list together, but then what would you do with it?
Prioritize. You just have to pick one thing, right? You just pick something. The list is never going to get completed. I've had work on the business days, and I've got these stacks of old notes on the action items. And I've gone back 3 years and said, I wonder what I haven't done yet. Nope, still haven't done that. Like, for example, I still don't have a CRM. I know that's embarrassing. But you know what? There were more important things to do, and that's okay. You just keep looking at the list and say, no, I need to do this now. And that's your own kind of project management. You decide what's most vital for you.
And I think with those bigger projects, though, actually giving yourself enough time to get them
Yeah, oh my
done,
gosh, yes.
so you don't create fictitious deadlines for yourself, right? Pick one of those big projects, one a quarter, right? If you do that, by the end of that year, your whole business is going to be in a better place because you just tackled 4 major roadblocks in what you're doing, right? Or even one every half a year or something, but just like give yourself enough runway to do that and then just make that steady progress on that one thing. And it's not overwhelming and you make major improvements.
What I really like to work with accountants on is a simple prioritization system that you can use as any software, Excel, sticky note, whatever. Emergency needs to be done today. U, urgent within 48 hours, and then NU, not urgent, but a specific date as to when you're going to get it done. And I mean, that just helps keep everything in line with your priorities.
Yeah.
All right, we need to pause one more time for continuing education credit. So if you look on the bottom of your screen, you'll see the CPE code for this session, the third code. All right, be
And
sure
the last code of the
last code of the whole thing.
Ring it again, ring it again, ring it again.
The most important.
All right, there we go.
All right, yes, cheers.
Get that code in.
Did you have a question?
So,
there?
I want to
Yeah.
bring up one other thing that is related to scope. In fact, it's one of the elements of a scope document that I think is important that we haven't addressed here today, and that is assumptions. What are the assumptions that we're making? And there's some standard project assumptions. If you go to the PMP classes, and you'll learn what those things are. But I think, to me, one of the most important ones to clarify around the assumptions is what percentage of my customer's time do I have access to as a project manager? So in other words, if I'm managing a project, there's going to be certain things that the customer needs to get done. I want to know how many hours a week can I assign you stuff? And I'm going to include that in my assumption. Like, I am going to assume that I can give you 8 hours of stuff a week to do, and that it will get completed. And if it doesn't, that's why we're not delivering on time.
Right.
And I think that that's one thing that is missing from a lot of scope documents is the assumptions about what are the resources that we have at the customer to put to involve ourselves in the process. Really, I mean, that the number one thing that I think that delays projects is not the professional. It's mostly the customer didn't get stuff done the way they said when they said it was going to get done, and then of course they come to you and say, "We're 3 months late. Why?"
Well, I think to that same point, though, just recapping the assumptions of what you used to build that scope, right? That you had this thing done already, and I'm coming in and it's not, oh, I haven't reconciled anything for a year, right? Or I don't have that thing together that I told you I had together, right? So I think also that assumptions piece, which we do also, just kind of recaps, this is what we know about you and what about this project, kind of let's align that these are all true, right? So you're not then going back in the after action review, I call it the postmortem, but you're not going.
Postmortem means death.
I know. Well, the project is dead. It's done. It's over. We're moving on. So
Post awesome.
yes, there we go.
Let's just change.
No, we're still awesome. We're still
Good
awesome.
point.
No, so I think aligning on that also helps you have those tougher conversations later on if a project does go south, right? Of actually being able to talk and say, well, we were under the understanding that all of this was accomplished, set up, and done before we started this, right? Which a lot of times kind of gets wishy-washy in those earlier conversations where the clients just, yeah, I have that, don't worry. Let's just scope this because they want to make the scope as small as possible so you charge as little as possible and then ask for all those increments later on, which I know you guys have run into clients like that they know this up front, that they're going to ask for these other things, but they're not going to tell you about it up front because they want it out of the scope, and they're going to try to ask for it later on.
Yeah.
Like, that happens, right? So then having those assumptions that you're aligned on, just as important as the objectives being aligned on, in my opinion.
Well, and I love that you're talking about having that communication with the client up front and setting those expectations, because as the recipient of somebody that tried to manage me as their scope, which was hilarious, when you're having that conversation, so I'll give you the example. When you're having that conversation with your client about the big project, go ahead and say, here's the timeline, and calendar the heck out of that so that they have commitments to it. Because see, I was on the receiving end of that as a firm owner, and I no joke, I have 10 companies. A little busy and 3 kids and a wife, so things go on all the time. And the guy was falling behind. He's like, well, I assumed that I was going to get 4 hours every day of your time for the last couple months. I literally, when did I say that? Because
If he had put it in his scope document,
I would have also
Right,
told him no. I would have laughed then instead of, on a
Right.
delayed project. But the important part of that is he went in with an assumption. And like, look, it's just a website. You're not getting 12 hours a week out of me to build a website. I'm just telling you, that's just not going to happen. So, but that communication never happened. He said, I'm going to need a little bit of your time each week. It ain't 12 hours.
Yeah.
And so that assumption was very, very unclear. And so when you're on the giving end of that, lay it out, spill it out. Just say, here's the dates and times that I'm expecting, and then you guys can be very, very clear.
A little bit of time is
Not 12
a
hours.
nebulous unit of time, right? It's just which is nuts. Nebulous unit of time. But here's the worst thing you can do in project management is use ASAP. as any kind of, like, we need this ASAP. What,
Just
what
delete
does
that
that
from
mean?
your language.
just delete it, because it means the exact opposite to sender and receiver, right?
Yeah.
If I send you something and I say I need it ASAP, what do I mean?
Now.
I need it now, right? If you get something that says when do I need it as soon as possible, you just emphasize, well, it's not possible
That's
right
not
now. So
I don't have time till next week.
it may
so
never be
more.
possible.
Right.
So Sean, I want to ask you a question that came in from the audience that said, at what staffing level should billing ideally be done in order to minimize scope creep and write-offs?
Management level. There should always be somebody that's overseeing that work, right? Because staff level, they may not have the experience to even understand what they're doing. You give them the job, you talked about that, they're the doers, they're doing that work. Some managers should be watching that, and it depends on the size of your firm, right? I mean, if it's you and 3 interns, it's you. If it's 50 people, then you have layers. And so the doer, the person that's doing the task, often should not be the one managing it. But then to your point, sometimes the project manager isn't the doer, but a lot of us it is. And that's part of the development of an employee is moving to management, is understanding the scope as well as the deliverable and sometimes doing the work. And that's just expertise and experience. So some managerial responsibility comes with that.
Okay, thank you. And then Aaron, when we're talking about the project managers and these tiny firms, they probably aren't going to hire someone. But you're actually doing an evaluation to consider bringing on a project manager, am I
Yes.
correct?
Yes.
What does that look like?
It's painful.
Wait, hiring's painful?
I know, right? Because that's not hard. No, so I mean, we're going through looking at that and really evaluating across everything that we're doing, where can a project manager plug in and help, right? And provide that ROI at a smaller firm, which we are right now. We're not just going and hiring people that are going to sit there and do nothing for 50% of their time, right? And most small firms are not like that, right? So we're really looking at that and saying, okay, what items beyond just holding people accountable, because realistically that's kind of deadline focused a lot of times, right? Something's due the end of next month. They should be checking in periodically throughout that, but then besides the check-in to hold someone accountable, what else are they doing? So we're kind of merging that project management with the customer success role together to kind of have that person to constantly be reaching out to the clients and managing their expectations, as well as internal team management, I guess you should say. So team success manager, client success manager, and project management all together, because they're very, very much related to one another.
And Gail, I'm going to jump in and call sponsor privilege on this one.
He brought alcohol. He's
So I brought the wine, so it's also a wine privilege. So I'm going to throw a turd in the punch bowl of all of this, right? And then,
IBM.
and and I'm going to say this, and this could be set us up for maybe next year.
Okay.
All right. If you move to the subscription model, project management becomes irrelevant. Because what you're doing in a subscription model is you are doing more sprint. It's not really that it becomes irrelevant. It goes away from project-based to sprint-based, agile-based. Mm-hmm. And what you do is every 2 weeks or whatever the cadence is, you meet with the customer and you say, what are we going to accomplish in the next 2 weeks? And all we have to concern ourselves with is what's the next 2 weeks? What's the next 2 weeks? And then it's completely up to them because you're on a subscription. We're going to get it done as quickly as we possibly can so that you get it done, so that we get it done. But we're going to move at the proper, you're going to get paid, we're going to get paid. We're not going to worry about hours anymore. There's no concern with, are we being profitable on this? There's no out of scope. All there is it covered or not covered? And here's the distinction between in scope and out of scope. And it's almost a cliche to say that the stuff that's out of scope usually is stuff that you can do. Is that fair to say, right? It's not something that they're not asking you something that you have no knowledge of whatsoever. Yep. Right? So the question, what it shifts to is covered versus not covered. You're covered for anything we are capable of doing. I can't write you custom code. I'd have to go outside and get someone who does a customization. I'll manage the relationship to make sure that what you need gets done, but I can't write the code, so that's going to be a separate thing. But if we can, in a subscription model, if we can do it, it's covered.
So what's interesting is the punch bowl is a mess because I completely disagree.
Oh, that's okay. I always disagree with this guy.
That's why I brought this up.
I love it. We do subscription models. But so here's a perfect example. Our subscription model is how we support people throughout the year, and a lot of it's ideas and suggestions. If you need an R&D study or a cost segregation, or we're going to do an ERC, or by the way, you want me to build you an entire financial model, you have requested a project at that moment. So we scope that out into the engagement letter of the subscription. Here's the stuff we're doing. Here is the list of stuff that's out of scope. So we define our subscription of what's not involved, because what I don't want to do is, man, building a financial model can be a $5,000 to $50,000 project. Nobody's signing up for that subscription. And so, at least not in the smaller business community that we serve. So we say, if you ask for this, we will then quote you that project. And so the service model, because I actually heard this from somebody earlier this week that was saying all subscription, everything's included. That just sounds exhausting and unprofitable.
If it's not everything that you're capable of doing is included.
I'm capable of doing it.
Okay.
I'm not going to do it for free. For that.
So therefore,
fee.
I suggest to you that you have a
there.
pricing problem.
Yeah, he's not talking about charging $500 for a subscription. It's
Right.
like $20,000 a month, and we will do anything and everything
And that
we could
depends on
possibly
that we are capable of
Yes.
doing.
It depends on your client, right?
Right.
It depends on the clients that we serve would never pay. They'd be able to pay.
Well, they pay for your project.
When they choose to have the ROI. And that's the issue. Is the ROI is the key the client's always looking for. Would you rather capture that client for $1,000 or $1,500 a month and then tell them, by the way, though, if you need a cost seg on that building, my man, I'll be happy to do that for $10K. And then then there's a collaboration on now it's time. And our role is to support them under the scope of that work. And then these are the other add-on items, and that's perfectly fine. And that puts empowerment in their hands to where they feel like, I'm okay with that. And so then you have that relationship of trust that I'm not charging you $30,000 a month, and then they have that constant, what am I getting for this? I feel like I'm obligated to do an R&D study now. I don't even have software or processes. So,
I don't know what it is, but I want one.
Yeah, I got to do something. That it has worked out really nice to collaborate with the client on, here's what we offer, just understand these are the out of scopes. And it comes back to that communication on the front end. But there's a lot of ways to do a subscription model, and that's what I love when I attend conferences. Here's how it's done. By the way, this is also how advisory is taught. You must buy this software and do KPIs every single week. Not that we talked about it in the first session, not that I'm passionate about it. There are infinite number of ways to do what you do. And find the thing that fits you and the clients you want to serve. Be profitable, because it's not a pricing problem if you're making a ton of money and your clients are happy. And that's where we are. We're making great money, and our clients and our employees are happy. And there's no fight about, oh, you mean building a model to project the next 5 years of my life that I have variables that I can key in myself, and you want to build it entirely in Excel instead of using a tool? That's going to cost me extra? You bet you believe it will. I could use a tool like Jackie has, and that's great. Boom, we got it. But if you want something custom, you've asked for a custom-built, Camaro as opposed to here's your Pinto.
But I think that goes back to the whole point of this session, right, around scoping, right?
Yep.
Even if you are doing subscription model, and whether it's, you call it in scope, out of scope, or covered, not covered, it's still defining what you're getting for this value, this price, right? So I think regardless of if you do it that way, where there's still projects out of scope, which we do the same thing, right? If you're paying for CFO services, that covers this, and then here's a list, by the way, of like 20 other things we can do for you if you need them and the extra services, but it's about defining that, right? And then I think also, just as a side note, it's a different conversation for project management. If you do a subscription model, I don't think it makes project management irrelevant. It just makes it not what you're pricing based off of.
Well, we're going to continue this conversation at dinner, and I'm going to explain why you're wrong.
That's fine.
But you all are
Let's do
going to
it.
miss that because you're not with us.
drink
We can bring cameras. We'll put it on YouTube. You'll
In
find it later.
Ed's favor, he always makes us think outside the box, and he's always making us think outside of our industry. And so I love that, because we are so narrowed in on what accountants need to do, and there's so much more that we could be doing.
100%.
All right, Alexandra, a final poll.
I want to know how many of you attended how many sessions. Did you attend 1 to 4, 5 to 7, 8 to 11, 12 to 13, or all 14? And I just launched it, and already 91 people said they attended all 14 already, like just within seconds of launching. And now I'm up to
so
97.
much.
I know. So I said, put your names in there and your cities. We'll keep it for the record. We'll give you some shout outs. We got Dan from St. Louis, Aaron from Texas. So we're going to have some other names while the credits roll, if that's okay. But go ahead and do your closing comments, Gail.
Yeah, I wish the credits were rolling on the screen so you could keep shouting out the names, but I'm going to roll the credits verbally. So we want to thank so many people who make this event possible. First of all of you guys for attending. And next, all of our sponsors who pay the way for this to occur, and that includes ADP, Avalara, BotKeeper, Corpay One, CPA.com, Canopy, Caseware, Field Guide, eFile for Biz, Intuit, Right Network, SafeSend, Sage, Suralink, TaxFile, TechGuru, Xero, Zoho. Next, I would like to thank all of the CPA Practice Advisor team who, are, for the most part, are working behind the scenes here. You can't see them. That includes Barry Strobel, our publisher, Isaac O'Bannon, Jason Bramwell, Judy Corey, Kira Roberson, Stonewall Thomas, Michael Sachs, and a special shout out to Scott Citron, who was our traffic manager, making sure all of our panel participants got in and out at the right time. I would also like to thank the amazing Alexandra DeFelice for co-moderating every session.
My pleasure.
And all of our outstanding panelists who made it through 2 days and all 14 sessions. And then the great team at AMS Pictures, who you can't see them, but we're watching quite a few of them right on the other side of the room. That includes Larry Rodriguez, Cliff Caldwell, Daryl Nelson, Forrest Eleuteris, Kurt Vaughn, Randy McDaniel, Andrew Rye, Jeff Bongfelt, Caleb Karenbrock, Michael Kless, not sure about that pronunciation, Adam Cobbs, Shavella Stevens, Diane Lowe, Ben Campbell, and the great Margaret Starnes. Thank you, everyone. We'll see you next year.